It would help if I turned it on. Right? Cool. All right. How are you folks doing? Okay.
Great.
You're like a post-lunch lull here. I think we need to pick the energy up. All right. Well, let's kick it off. Thanks for having us. We're excited to talk about AI. Why don't we start with some introductions? Just who we are, what we do, why should people care, that kind of thing. And maybe Michael, we'll start with you.
Yeah, sure. I'm Michael. I'm the co-founder of Zero-G, and you'll get some alpha because we haven't publicly disclosed this, but we are going to be revamping our website, and we're going to be launching basically the first decentralized AI operating system on Monday. And so we're super excited about that. So what that contains is a data infrastructure layer, which is the storage layer, then a data availability layer on top of that to enable throughputs like in centralized systems, 50 gigabytes per second plus per consensus layer. On top of that, we're building a serving framework so that anybody can register as a serving node and provide things like inference, fine-tuning, and so on. And so we really want to be the connective glue that brings all of Web3 and AI together. Currently, we have more than 300 projects building on top of us, and our testnet is just gone beyond 4 million transactions per week. So super excited about everybody building on top of us. My personal background, I started on the technology side as an engineer and technical product manager at Microsoft. After that, went to the business side at Bain & Company and then Bridgewater Associates. After that, started my first unicorn and top YC company out of Stanford, and then left to found Zero-G with some brilliant other co-founders. And Ming, our CTO, is also in the audience, as well as some other team members. So that's me.
Cool, thank you. I'd like to ask some follow-up questions. Like, tell us more about what will the storage hold? Are they going to store models there? Is that the purpose? And also tell us a little bit about the apps that are building. So, we'll give us a flavor for that.
Yeah, for sure. So the storage is general purpose. We've got different levels of abstraction. It can be anything from block storage to key value storage to transactional. So you can literally build anything you can build in Web 2 now in Web 3 through that. So if you wanted to build a decentralized Google Docs, you can do it at the transactional layer. If you want to build a vector database, you can do key value store. And then if you just want to do something like Filecoin and just have like Glacier level storage, you do it on the block layer. And so any size with very fast data ingestion and retrieval rates can be built now in Web 3. And we actually, Chris, our AI engineer, who's in the audience, so talk to him. He did a test where we did some streaming data with fine-tuning and RAG. And after about 2 minutes, the performance was the same compared to centralized systems. So there's an initial catch-up period, and then it's the same performance, no overhead. And so we're really happy with those results. So that means that there's no performance trade-offs now between centralized and decentralized systems. Still latency constraints and so on over time, but yeah. So hopefully that answers that.
Yeah, how big was that model?
Chris, how big was that? That was, I think, a smaller one, right? 7 billion parameters.
It's a good size. It's a good size. And maybe a flavor for some of the apps.
God, they're all across the AI pipeline. So it starts with data generation, like Miso, like synthetic data, to then data cleaning, like public AI, to then model building. So like Pond, for example, is building on top of us, like large graph type of models, to agentic frameworks, to execution layers like Aura. We're Theorix on the agentic side. So they're using all of that. Yeah.
Cool. Thank you. All right. Shashank, yeah.
Hey guys, my name is Shashank. I serial entrepreneur, investor, co-founder of Gaia. Background, have a few exits under my belt, and decided to hop on this project a few months ago. We spun it out of Berkeley, and raised quite a bit of money, and decided to come back to the Web3 space. Gaia itself is a decentralized AI project. I guess it's a broad term, but at our core, we're DevOps infrastructure. We make it super simple and easy for anyone to set up their own AI agents. It's kind of like the Stripe for setting up your own AI agent. 10 lines of code. You have your own node that's highly versatile, highly modular. You can run it locally, on-prem, 8 gigabyte CPU requirement, all the way up to AWS or whatever else you want to choose. You can, choose your own LLM, your own DB, very, very modular, and easy for devs to set up, which has led to incredible growth. We lost our test net in late May and have about 41,000 nodes. So quite rapid adoption there, just because we make it easy for people who want to deploy AI agents but don't want to do it on OpenAI. That was actually the inspiration at Berkeley when we spun it out. The professors there did not want to put their data on OpenAI, so we want to make it easy for anyone to set up their own agent, own their own data, monetize it. So on the Web 2 side, it's led to a lot of great pilots with some well-known institutions like Qualcomm and NASA and Samsung, Fitch, quite a few others. We have like Gary V's AI influencers, so it's like pretty wide range of kind of use cases. But it just goes to show you how C-suites are aligned on AI, but they're not aligned on giving someone else their data. So we're solving that. But yeah, on the Web3 side, we help make it easy to monetize that your agent via attribution, validation, and monetization. So we kind of the first chain that helps you match models with compute. We're not kind of competing with some of the other kind of projects necessarily. We're open source and Web3 based, but we kind of occupy our own DevOps niche for being able to one button deploy multiple and operate multiple nodes, monetize them, and then kind of maybe support yourself via validation. So, but yeah, excited to be here and.
Are these customers opinionated about the kind of models that they want to run their agents on top of, or do you orchestrate that as well?
Yeah, the models themselves they can choose. We always start everyone off on Llama, but they all have their own opinions sometimes, and then the major Web2 institutions don't have any opinions. To be honest, they just know their C-suites need to get behind AI, which is a very broad topic, but they know they can't do something, but they don't have a specific opinion in a lot of times. Others do have, like with NASA, for example, they were in the process of creating their own model or had a few ideas of what to create, but for us, they just needed us to spin up the agents. It was a decision between going through a government procurement process to hire ML engineers that are no RAG and it's like a 2x salary basically, and a multi-week project, or 10 minutes spinning up their own nodes. So that's kind of where we help them. So.
And how do they get over the privacy constraint of, like, if they put this on a public blockchain, someone's running a node, they claim to be hosting a certain model, and there's data privacy issues there as well, right?
Yeah, so they can choose. So the thing is, a lot of the clients we mentioned are not even on the Web3 side. They're just Web2. It's on-prem. So at base layer, you can clone it down. You can go on there, clone it down, open source, right?
It's a permissioned blockchain.
Yeah, the blockchain itself, if you want to, it's purely for inferencing, right? So you can keep all data on chain, on-prem, but you can handle the inferencing on chain, right? So you don't ever, security-wise, you get to choose what parameters. We are kind of implementing more security measures that you can tap into, but at core, we're kind of leaving it to we have domains and nodes. Each domain can decide how they want to handle it. Berkeley has its own domain operating multiple professors as AI agent nodes. The domain people can stake their tokens. They can choose the rules. Each domain can choose their security measures to validate. So we try to stay out of that side.
Got it. Cool. Saneel, tell us more.
Hey guys, I'm Saneel. I'm on the founding team over at Ritual. Ritual is building an L1 that will let you access models anywhere on the chain. So we've actually spent quite a bit of time, thinking about, okay, how do we make models actually useful for end application developers, for inference, for fine-tuning, et cetera, and then how do we make that accessible in a really crypto-native way? So what Ethereum did for the computer in terms of creating sort of like an open, shared, collaborative environment, right? That people go, build applications arbitrarily on and have them interact with each other. We're going to be doing the same for AI models, and we should have some very exciting announcements around being able to actually use some of that very soon. And we have a ton of applications that are building on us that are doing everything from, I think as it relates to Liquidity Day, things like, ML-driven DeFi, things that really push the boundaries of what consumer applications look like at AI and crypto, right? Things that really take advantage of like agents as cheap operators to, seed initial activity on an application, things like that. And we also work with a ton of fantastic partners. We are focused on bringing sort of net new capabilities to the space as well. So one really exciting thing we recently announced is the ability to do completely private inference for at least smaller models with Nillion, which is really only possible in a decentralized setting because that takes advantage of multi-party computation. You do need, a distributed set of nodes in order to make that happen. And we can also do sort of private model storage with them as well. And so we'll be announcing quite a few more things like that soon. So on Ritual, you'll not only be able to write smart contracts directly over AI models, whether they're LLMs, whether they're regression models, or other classical architectures. You'll also be able to do it in ways that preserve privacy or preserve the integrity of the inference, which opens up a whole new level of possibilities. And then personally, I before Ritual, I previously spent time on the investment teams at Dragonfly and Polychain. I also was on the founding team of a DeFi protocol, and then more academically before crypto, I was spending a lot of time doing theory and ML. So.
Cool. Thanks, Neil. We'll keep the train on these tracks at Ritual. So maybe if you could unpack in the spirit of liquidity and being here, like what's maybe top down from an application perspective, right? Like where can ML or AI on chain really help? Let's say DeFi. And you've been on the DeFi side of the house. Like,
yeah.
What is this like future that's imminent look like with AI really powering some
protocols? No. So I think that if you go and look at DeFi versus traditional finance, you will see that DeFi is ahead in a lot of ways. Sophistication of strategies is not one of them, right? In terms of the way that parameters are set for, the LTV on a lending protocol or the fees on a pool it's done fairly arbitrarily. So either you have an isolated lending setup like Morpho, where you have, people that basically are like, hey, this is what it should be, or you have, more traditional lending protocols like Compound that go out and basically, go to Gauntlet or something like that, and they're like, hey, we'll pay you a lot of money. You push a governance update. It takes like a long time to get approved to update the parameters for this protocol. When in reality, like most traditional financial markets, you do have sophisticated market participants that can really just go plug and play their strategy, which are largely models most of the time, whether they're market makers, whether they're credit underwriters, right? And so I think with bringing AI on chain, the goal of that really is to bring some of those sophisticated strategies on chain and make it, incentive aligned. So what does that mean? If you have an AMM, right? So someone's actually building this on Ritual. One very simple exercise that can help mitigate some of the problems with making liquidity on chain is to have a model that goes in, aggregates a bunch of different features from both, centralized venues and on-chain venues, and says, hey, we think that the asset's log volatility, or like the volatility of this asset, is going to be like this for the next 15 minutes. We should adjust fees in relation to that, because we do know that if volatility is high and fees aren't adjusted to compensate, then the people providing liquidity to this pool will lose money, right? That's a very simple thing. We actually built that. So we have a team that's working on that. That's something that's already built, right? And then you can start seeing that the surface for plug and play actually expands greatly, right? You can have it so that people come and have models that can screen toxic order flow. And then if you're working with a lending protocol, maybe this model is really, really good at identifying like how much at any given point dynamically should you be able to loan USDC against like Bitcoin, right? Or even price more esoteric things like this model prices RWAs and lets people take out loans against that. Basically, when you have this, you have the ability to go do like arbitrary pricing, or you have the ability to go do arbitrary like dynamic updates to these protocols that otherwise was impossible. Problem is like, how do you get those models on chain? How do you get them operating efficiently? And how do you make it incentive compatible? A lot of what we're building at Ritual basically revolves around that, right? And with Ritual, you can actually go write smart contracts to directly call out to these models. So in writing your AMM or your lending protocol, you can literally specify functionality that goes and says like, hey, every X blocks, I want you to ping this model and update this parameter, right? And like I mentioned, we have a lot of really interesting ways to make it so that people who are actually running or providing these models don't necessarily have to divulge their weights. And the last part is like, why does this need to happen on chain? Is you can actually have some of the yield or revenue that's generated from these pools passed back to the model creators, so they actually have an incentive to continuously supply better and better models. Because it's like, if I'm creating a pool and I'm selecting which model I want to govern my pool, I want to select the best, right? And in order to incentivize the best, you need to give them a little bit of something. So I think that it's DeFi with ML is a very interesting way in terms of reshaping how liquidity is done, because you can reach ideally, parity or at least closer to parity with centralized systems in a way that's very incentive compatible and in a way that's very crypto native. You just need the right rails for it.
I guess the question for the two of you, I mean, and it's just segueing from here, what is the cost of hallucination look like in a situation like this? Now, granted, these are like hyper fine-tuned models and things like this, and I'm sure
I would say these are, just to clarify, these don't necessarily have to be LLMs. These
Sure,
are
sure,
classical
yeah.
models. They can be deterministic. So
Absolutely, yeah. Well, in non-deterministic situations where, like, if it's a true choose your own adventure kind of situation, which is like an operating system or agentic infrastructure like you're building, I'm curious, like, how do you underwrite that, especially in a decentralized environment, right? So curious if you've had any thoughts on that.
Well, I would kind of put a bit of a higher perspective on it. Is how often do humans make mistakes? Like, how fallible are human traders? And so can we get these LLMs, if you're choosing an LLM for trading, to be as good as human beings in terms of trading, and even with hallucinations, still be performant better? And I would say with kind of the right level of fine tuning, you should be able to do that, like just fundamentally and philosophically. So it may be a false kind of dichotomy type of question.
Yeah, I mean, I think one of our goals with our DevOps is really to be able to track the inputs and the outputs and the hallucinations, so you can run multiple nodes. But underwriting the the amount of mistakes is it's all dependent on human data, right? So as you said, like they're bound to be. But then I think I think all of our projects and a lot of Web3 AI in general is you're solving for kind of the immovable wall of human data, which AI is the unstoppable force, they say. But really, OpenAI hit that wall a little while back, which is like you can't encompass and all kind of deviations. So the only way to do that is to decentralize and have other methods. But you can't do that if there's kind of the institutions we work with won't share their data. So even when you're dealing with an OpenAI that supposedly is massive data set, you're a lot of the most targeted, richest data sets in the world, like your governments, your defense industries, your healthcare industries, they're not on there. They've made many attempts to make sure their data is not being referenced. So you're looking at a broad data range, like a very generalist data range. So the Web3 kind of decentralizes the only way because you're not creating a monopolist amongst any of these projects in between the data holder and the kind of output. So
maybe just to add to that from a non-LLM example, if I remember this correctly, so don't hold me exactly to the numbers, but I think when Pond ran their experiments on their large graph model, I think they ended up having a 95% predictive power in terms of which particular tokens will increase in value given kind of the movement between the interaction of different wallets. And so if you're choosing a non-LLM model, then predictive power should be pretty high. And so then you can use that for trading purposes and so on.
So we're all going to get very rich very soon.
Yeah, just use Pond, I guess. I don't know.
Yeah, I know. Great Pond plug here. Where's Dylan when you need him? Cool. Well, I want to be Steph. Just hook me if I'm running over time. What are some earned secrets? I mean, you folks have been at it. You've got like varying backgrounds. I'm curious, and I like not to add my own level of color or shade that I get occasionally, which is like, oh, there's a lot of bullshit in this space, a lot of stuff that doesn't work, and I'm like, I don't see it, and maybe I'm too deep in the hole or whatever the case might be. But maybe to combine two different tracks here, one of which is like, what have you folks learned that you feel has been like something fascinating that you've uncovered in building what you're building, and maybe in the scope of liquidity and markets here as well. Let's start there. Yeah, curious, Saneel.
Okay, I'll say something I've learned that isn't in the scope, and then I'll say something I've learned that is. You building new infrastructure is incredibly hard. Building like opinionated infrastructure, especially since we're talking about crypto and AI, building infrastructure that says like, oh, this actually fuses those two technologies at a deep systems level is very non-trivial, and folks should be very, very skeptical of anyone who's claiming that they've solved it very, very fast. So I would say, please vet all the systems that people are claiming, because I think that right now it's great to be skeptical. Back when market conditions, back when Pond was outputting 95%, token go up, back when market conditions were good, people were investing in things off the narrative purely and what was told to them. So don't listen to the talking heads, including any of us on stage. Go do your own research, right? As it relates to, what's been very interesting in terms of market liquidity, there is a lack of fundamental liquid opportunities to get exposure to AI in outside of Web3. If you want to go and buy AI outside of Web3, you basically need to go buy FANG stocks or NVIDIA. No one wants to buy FANG stocks, and that's why NVIDIA is running up really, really hard. But what we did see is that when traditional capital allocators' risk profiles were a little bit more on, back when macro conditions looked a little bit better, we saw a large net inflow into Tau and Render specifically as why those two assets, because they were the only two sort of like mainstream accessible assets at the time that had that AI narrative. I do think that one thing that cannot be underrated is that market conditions do come back, and obviously this is not financial advice, and none of this is Web3 provides a much more interesting and unfiltered access to those opportunities. But correspondingly, there will be a lot of tokens launching, trying to ride off that narrative that probably have no business riding off that narrative. Hence, go do your own research. But I do think that people will be surprised by the level of bid that will come in structurally, not just because, AI and crypto is a sexy narrative, but because there's just very few liquid opportunities outside of crypto to invest in AI. So I think that's something that was very interesting to see earlier this year.
Cool.
I guess for my part, kind of piggybacking on what you said at the beginning, I was very surprised about the lack of actual technical diligence capabilities of investors in the space. So I would say like the venture arms of most, especially Web3 funds, I don't think they're capable of honestly distinguishing between AI. AI is a monolith, and I think we're still at the stage of labeling AI like internet companies. There's going to be a lot more than us, and it still needs to be flushed out. But there's not enough knowledge yet. There are some excellent Silicon Valley VCs and other normal VCs that do
normal.
Normal. They don't care about the token. But I think, but that being said, there is excellent opportunity here with any AI Web3 project because of the kind of the link between hard data and the value of that data and the exponential value of data and computing in the future. There actually could be a direct correlation of value accrual, which you can't really necessarily make the claim on maybe NFTs or something, where NFTs are more of a subjective driven value add. I think there's an actual, quantitative approach you could take to maybe a AI project. So pretty exciting.
I think we're super early in the space, right? So there's been a bunch of experiments that have been done, DPINs, and then some coordination layers like Tau and so on. And then there's certain things that just fundamentally don't make sense given, computing shortages. Like, for example, if you're trying to do verification through a consensus and you have everybody kind of repeat a GPU computation, like makes zero sense to have decentralized. Or just have a ChatGPT wrapper and then, call that from a smart contract. Like, yes, that leads to overhype. And so there's things like that that are not particularly interesting. But then the early part is like centralized AI, all they care about is getting to AGI at this point. Like they don't really care about decentralized AI. They care a little bit right now because they're like, okay, I guess we need to get some quality data sources and maybe there's a way to incentivize people to give us more quality data sources and it opens up some kind of private data. Yeah, so maybe Web3 has some answers there. But I think for the space to really shine is we need to show certain things like, can we A, get to AGI faster? Or B, can we build better models, whether it's small language models or actually bigger large language models? Can we even do decentralized training in such a way where we open up latent compute, where we open up latent data sources? I mean, that's where the really interesting stuff lies. And our hypothesis actually goes beyond that. We believe that the future of AI needs to be dependent on blockchains because for alignment purposes. Like what's blockchains really figured out as a coordination mechanism? Adversarial systems. So why can't we, enable that for AI as well? So AI doesn't like turn on us and basically says like, we don't need humans on this planet anymore. So would love to see approaches like that. So I think we're just super early. We're not even scratching the surface of what's possible. And so for that, we really need all the infrastructure to be in place so that we can start building towards these really interesting use cases.
What's your definition of AGI?
What's my what?
Definition of AGI.
Basically, I think there's many varying definitions. And so the way I would define it is could be one model or multiple models kind of strung together that can outperform basically up to 3 standard deviations any human being on the planet.
Curious to hear your guys' thoughts. Have you thought about AGI?
What the definition is, or just in general?
Maybe both. Yeah. Like, what is your interpretation of AGI? Because the reason I ask is because I feel like we've all got different ideas of what this is, or the timeline, or to your point. I'm just piggybacking off what you were saying, which is like a lot of centralized companies are racing towards this. So I'm curious what that really means to you.
I mean, AGI for me, it's always like portrayed as like the boogeyman of like Terminator or something, but AGI is a kind of a moving target, I would say, because you're trying to encompass a certain level of intelligence that surpasses or approaches human level intelligence. So to me, it's probably something that surpasses, but then there's various levels below that. Where once, for me, it's the basics. A starting point is being able to understand our quantitative data sets, which we're close to, I heard, but not there quite yet. Because a lot of the models right now rely on qualitative data, which can be very subjective. So that starts to fall apart. Quant starts to change the world because you start to break passwords and you start to, change a lot of the way our systems work in the world. So that's kind of, I don't know if that answers the question, but that's
good to understand.
You inspired kind of this thinking that I can also distinguish AGI from ASI, which is artificial superintelligence. So if I imagine a system that at any point in time knows the entire state of the world in every country, everything that's going on with logistics systems, administrative systems, governmental systems, a human being can't do that. A human being can't like have millions of data streams come in and then make some decisions off of that. But artificial intelligence models may be able to do that. And so I think that's beyond AGI. So there's somewhere kind of like the barrier between those, I would say.
I think we've already seen that models that have hit very powerful general purpose functionality still lag behind other models in specific domains. So a very good example is GPT releasing 1.0. 1.0 is a phenomenal model. It crushes most reasoning benchmarks. Like it destroys most benchmarks, right? Yet it still underperforms on coding relative to Claude Sonnet 3.5. So I think that's just more and more, we see more and more indication that when you think about the concept of AGI, it will not be one single model. It will likely be one or a set of models that have generally pretty good reasoning capabilities. I would say, let's take standard deviations as an example, maybe 2 or 3 standard deviations above the norm in terms of coordination, in terms of routing, in terms of reasoning, and then a network of other models that are very, very good at task-specific domains, right? And so you basically have, in essence, I think the way that humans work, which I think is reassuring in a certain way, where there are people that are really good at certain things, and there are people who are really good at figuring out how to apply those people, right? I don't see empirically why models won't end up acting the same way. And when I look at all the Web2 companies that are basically in this arms race for AGI or ASI or whatnot, right? I think they're aware of this too. I think they're aware that, they can continue to push the boundaries of like their performance on benchmarks across the board nonstop. But, you may release a really powerful general purpose model and someone's still just going to come along with like, a large open source model and fine tune it over a specific domain, right? And it's still going to outperform provided that they have the right data and all the quality data. And I think where a lot of these companies then are really, really running and rushing is one, getting more compute to just train more stuff and train stuff faster, right? And two, just getting more data because that's actually where you maybe eke out an edge. But yeah, I do think, maybe going back to the question, AGI is more of a swarm than it will be a single model.
That's fair.
How do you distinguish that from MOE versus kind of like middleware with different models? I think we're starting to see that with centralized models already. But I think the difference is we have no idea how those MOEs were trained in the first place, what the weights and biases were, where the data came from, like what copyright infringements are being done.
Well, MOEs are, when you look at like MOEs at an architectural level, they are a much, much smaller subset than like an actual full model. Maybe there's an argument to be made that most like lower base semantics get encapsulated lower on the weight stack, or like lower, if you're talking about decoders, like, at the earliest, decoding blocks, whereas MOE only really occurs closer to the end. But we have seen that there's obviously difference in like an MOE with, switching between those heads versus like actually fine tuning a model, like actually changing a lot of like the later blocks and changing the weights within those. So, I do think there is like structurally an actual difference in that, like you are actually, trading is not for, encapsulating information, but you are actually teaching the model to do more things over a specific domain with fine tuning versus MOE, where you just basically have a bunch of heads that you switch between. And we've seen this like empirically time and time again.
Yeah, I actually agree. And I would love to see more experimentation on many small expert models kind of strung together through middleware in crypto. That would be pretty cool.
Awesome. All right. Didn't want to get the hook here, but let's just I think we overshot to ASI AGI, but I'll reel it back. Just like maybe, I don't know, maybe if you look at like the next year, let's say we're sitting here, Token 2049, a year from now. What are some things we're proud of what we've accomplished in this domain? And a year is a long time, I get it, but how would you project what's going to happen over the next year, specifically as it pertains to AI and crypto? And Saneel, I'll start with you.
In terms of what would be a good thing to accomplish, or like what I think we'll accomplish?
I think maybe collectively, what will we have accomplished, right? Like, and maybe, rituals progress to the point where there's more utility and Gaia and Zero G as well. So I'm curious from your vantage point.
I think there are certain things that crypto does very well that regular systems cannot. One of those is one, which I think Coinbase actually showed this already, is like showing that this actually is a better medium of payments for agents. So we already knocked that out. Two is I think that in terms of increasing developer access and seeing end applications as a result of that, one of the things we always talk about at Ritual is that if you have the right incentives that are aligned to get people to come and host models, and you provide them basically one big open backend to just go build applications generally on that, and that's essentially the blockchain, right? Then ideally you've taken both open access to models and you've taken the ability for anyone to just come and program directly over them as long as they have a Wi-Fi connection, right? And ideally that should lead to an exponential, ease of use for developers and, entailing a bunch of exponential experimentation on chain, right? And I think if we can show that, then the natural, byproduct and discovery of that is really just new business models. And we're already seeing this a little bit already, where a lot of these companies that are building, wrapper applications for specific verticals, at the end of the day, sometimes you hit sort of like a plateau in just trying to, monetize just straight inferences and revenue, et cetera, right there. A lot of them are coming to us and we're like, how can we reimagine this with protocol dynamics, right? And I think that's really important, because one thing crypto definitively has done well is provide new business models for a variety of use cases, but especially for open source software, right? And if anything, maybe the last thing I think that we can do really well, and I hope we do, and hopefully if I do my job right at Ritual, this will happen, is I do think crypto can lead to the right incentives to continue to improve, to continue to incentivize and push the pace of open source model development without necessarily being fully reliant on companies like Meta doing it out of the goodness of their heart, right? And so creating those kind of systems, which I guess is what we're doing, right, will be important, because you need to show open source model creators that there is an end path to monetization without having to build your own application around it.
To summarize, a super valid point. Right? I think we're seeing the gravitational pull, to your point from earlier as well. You've just got NVIDIA, or you've got large scale foundation models to which most people don't have access to invest in. And you have other sort of like subscale companies who are trying to figure out a protocol-based revenue model. And we might see, hopefully that'll open up the design space for them to build on chain, which increases our TAM. So, yay. Shashank.
I mean, for us, just continue pushing our penetration on the DevOps side. I think a success in a year and from now would be to see more Web2 institutions kind of come into our fold. We already have some large ones that are crypto curious. Not necessarily crypto from a crypto side, but from the monetization standpoint of their data. And so I love being the, a wolf in sheep's clothing there of trying to convert them. And the convo with us, at least because we don't really have any vendor lock-in or anything, is what can we do for your tech stack? What can we do for your data? And that's led to us have a very neutral conversation on how we can help them. So our model is open source. It's Red Hat style software services. So in a year from now, if we keep converting and keep driving revenue, that's success. But then if we can convince some of those Web 2 to Web 3 conversions, that's really great. It creates true value and true value coming into the token ecosystem that we're creating. Beyond that, I think overall, I think we are at an inflection point, hopefully in the next year or two, where I think we're gonna demand some respect from like your Silicon Valleys, because like I said earlier, I think there's a wall that they're hitting on the race for LLMs. It's now a $20 billion race, but that's $80 billion, whatever you want. But I think there's a wall there. There's a physical bottleneck of NVIDIA GPUs, for example, on large language models, which we were talking about stringing together models. I mean, whether you do that or fine-tune models or just more target smaller data sets, there's a real capacity here to enable the rest of the world, because it's really kind of the U.S. and China and really just the Fortune 500s of the U.S. and China who own that capacity for NVIDIA. Even like the Gulf countries with all the money they have are even struggling, right? So there's a real egalitarian drive here, which only Web3 can deliver, I believe, for the haves and have-nots, the rest of the have-nots, to be able to partake in the AI revolution. And I think we're kind of at the beginning stages of that.
So more non-crypto applications coming to Web3, and then opening up the design space so that anyone can really access GPUs using blockchain crypto incentives.
Yeah, the decentralized compute, decentralized kind of way to monetize is kind of the way forward.
Sick. All right, Michael, what do you think?
I'd love to, in 1 year, I'd love to see two things happening. One, more financialization type of mechanisms. So we've seen like initial model offerings, initial agent offerings, more of that to actually find, or even Morpheus with kind of this way of creating a treasury that's based off of like the yield of e-staking. Those are really cool because it can bring more builders into the space. Two, I'd love to see a model that was trained off of decentralized data, maybe even fully decentralized trained, that outperforms centralized model in some dimension. I mean, that would be amazing if we can do that in 1 year.
All right, we have some lofty goals here. My goal for next year is that I want digital twins of all of you showing up here for your panels and doing this on your behalf. And it needs to go past the asymptote of your intelligence. Like, that's my hope.
But then you'd be lonely, Anand, if we weren't here.
Yeah, exactly. All right. Well, thank you. It's super insightful. I really appreciate it. Please find these folks and chat with them about AI later. Thank you again. Yeah. Thanks for having us,
guys.
Thank you.